Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Precious metals have been in a bull market for the last coming weeks, maybe a couple months at most. But with that said, silver is in a unique and very interesting position we're going to talk about today. This article's talking about why or how underpriced silver is beginning to outperform gold. Now we've seen this in the past where silver is gold's little brother, right? So it catches up to gold a couple weeks or the following months afterwards. And since silver is more volatile than gold, it's like gold on steroids, the prices are more exaggerated to higher highs and lower lows. If gold's going to rise 15-16%, silver's going to probably rise 24-25%. But it also works for the downside. If gold's going to drop 15-16%, silver's going to drop 24-25%. So there is a lot of opportunity, but it's also risky. Now, this video is going to be talking about why and how silver is outperforming or outpacing the yellow metal. Now, we've seen the gold to silver ratio in March as high as 125 to 1. That was when silver was sitting around $12. And silver has already corrected 60% upwards to the mid $19 range, and it's approaching $20. Now, I think there is a huge barrier at this $20 level, and I definitely think if silver can break through that $20 resistance, we're going to see extremely high prices after that. Now, why is that, Silver Slayer? Well, that $20 resistance level is key. The last time we saw anything close to $20 was in July of 2016 at $21, and that's the last time we've seen silver in the $20 range since $50 silver in 2011. And as silver breaks through this $20 resistance level, there's going to be a lot of people paying attention to silver, and a lot of new money is going to come in, a lot of articles, a lot of YouTube videos, news forums. Everyone's going to be talking about it, which is going to make it attractive because the proof will be in the pudding that silver can and will do something big. See, gold already has broken through its all-time highs. Silver still has yet to explode. It's a ticking time bomb waiting to explode. And I definitely think that right now we are at a turning point, just the beginning of a huge silver rally that a lot of people are minimizing. I think it's going to shock the world. So with that said, make sure to smash the like button. I'm going to jump into this article, but before we start, let's see if this video can get 250 likes if you love precious metals. Smash that like button. Let's see how many of you guys love gold and silver. If you think silver is going to rise, smash that like button. Subscribe if you're new because I post daily videos. Now, let's jump into it. So, the gold surge and COVID lockdowns are hurting Asian and other jewelers. Traditionally, India and China have been big buyers of the metal, but after the start of the latest bull phase in mid-2019, many more Western investors are buying. So London, the surge in gold prices and COVID lockdowns are placing the Indian, Hong Kong, and other Asian jewelry industries under acute pressure. In contrast, leading gold companies that have managed to maintain production are coining in. Their overall costs of around $1,000 an ounce are 45% below the current market levels of $1,800 an ounce. The big question is how jewelers will cope when the locality relaxes in their respective lockdown regulations. So an extraordinary precious metals market. During previous gold booms, there was a switch to the white metal, such as platinum, currently priced at $833 an ounce, and silver, which is currently trading around $19.40 an ounce. Jewelry buyers, however, prefer gold as it contrasts with diamonds, but emeralds, rubies, and other gems have become more popular and look good when designed with platinum and silver. Ross Norman, founder of Metals Daily and niche news service, contends that the current developments in the gold market are quite extraordinary. Mr. Norman, a veteran in the precious metals community, said that in normal times, the big buyers of gold have been India and China. But after gold entered a bull phase in the middle of last year, when it decisively broke a key resistance level of $1,365, growing numbers of Western investors have been buying. Such has been the move from the east to the west that gold inventories on COMEX in New York have surged to 33 million ounces from 7.5 million ounces in 2019. This is almost a quarter of annual demand. The main reason for the inventory surge is that COVID caused gold refiner production and delivery disruptions in March. And that's so true. It halted a lot of miners from Mexico, Peru, Chile, some of the top producers of precious metals by almost 40%. They accumulate 40% of the global production, and they've been shut down. So bullion banks could not deliver the metal to the U.S. hedge funds, investors, and other speculators. To cover themselves for the future and to meet a surge in demand, the bullion banks have built up on COMEX's inventories to record levels. There have also been soaring flows into gold exchange traded funds, which rose by 788 tons, worth $42 billion, to 3,665 tons. That's 118 million ounces. The level now exceeds the 3,381 gold holdings of the Bundesbank, Germany's central bank. Mr. Norman recalled that precious metals, or the previous gold bull market, lasted 7 to 8 years. So, besides the multi-trillion-dollar rise in central bank fiat money reserves and the massive increase in U.S. dollar in global debt, the key driver of gold investors is the negative real return of U.S. Treasury bonds, Mr. Norman said. Gold is meeting some resistance around $1,800 to $1,820 an ounce, but it may well test the previous 2011 peak of $1,923 in the coming months. So, the coiled silver spring, and it's so true, it's like a ticking time bomb. The chart above illustrates the relative undervaluation of silver, basically because it is perceived mainly as an industrial metal. True, but besides being a monetary metal, gold is also a commodity. In normal times, jewelry is the main demand source for their industrial uses for gold. Credit Suisse and some other investment banks are bullish, but the majority of hedge funds and other traders are bearish, remarkably considering that several Mexican and other silver mines have cut production. Hedge funds and bullion banks are short. The Commodity Futures Trading Commission, CFTC, shows that net short, example, bear silver positions reached 77 million ounces on July 7th. There was a similar CFTC situation for gold in 2018 when it was priced at $1,150 an ounce. So I definitely think that that right now we're in an interesting position with gold and silver, because gold and silver are going to be moving at different paces right now. Silver being more of a diverse metal in two different categories, as an industrial metal used in 5G technology, silver nanoparticles, photovoltaic cells, electric vehicles. Silver demand is going to keep rising because it's so intertwined with the economy. That's also going to play in an opposing part for gold, because as the economy worsens, gold appreciates as a safe haven asset. Silver, on the other hand, does better when the economy is rising, because because so much money goes into 5G technology, green energy, which is taking over. And as the economy uses more of these resources, buys more or sets up more 5G towers, that's going to benefit silver. So as the economy does better, silver benefits. As the economy gets worse, gold benefits. Silver, on the other hand, is also a monetary metal, or a safe haven asset. So it kind of has two sides to the fence, or two sides of the coin, no pun intended. So anyways, I have another article I want to share real quick, and it's talking about gold and silver ratio, a long-term opportunity. It's very important to talk about the gold to silver ratio. So a standard deviation channel has been drawn over the gold to silver ratio. The center line of this channel highlights the mean of the relationship, while the upper and lower levels of this channel highlight two standard deviations above the two standard deviations below this mean. Circled red, we see that the ratio has moved the two standard deviation level. This highlights the fact that the price of gold has been outperforming in terms of that of silver. The historic relationship between these two metals would suggest that extreme outperformance of gold against silver at present is irregular. This provides the suggestion and expectation that this relationship may revert to a historical mean. So a reversion of this relationship back towards the mean, should it occur, could happen in one of three ways. 1, the price of gold falls while the price of silver rises. That's obvious. 2, the price of gold rises while the price of silver rises at a faster rate, which we're kind of seeing now. And 3, the price of gold falls at a faster rate than the price of silver falls. Rather than taking a directional view on each of these commodities, traders might consider taking the relationship of these two metals instead, example, a pair trade. This would be done by taking a short trade position on gold against an equally sized long trade position on silver. Should one of these three scenarios presented above occur, the pair trade would be profitable. It should be noted that this view is represented as a long-term view on the gold to silver ratio and could take months to develop if the assumptions are correct. A movement of the ratio back to the mean would equate 35% profit target for their pair trade. Traders of this move might consider using a stop loss threshold roughly half the size of an anticipated reward of 17.5%. So talking about exchanging gold for silver or silver for gold, using the gold to silver ratio to your advantage, which you can actually earn free silver or free gold by trading. You know, if the ratio is 100 to 1, you can trade 100 ounces of silver for 1 ounce of gold. Then if the ratio rises to 115, you can trade that 1 ounce of gold for 115 ounces of silver, and you just earned a 15 free ounces of silver by simply just waiting. But it also takes time, and you got to do it. Timing's everything with that, and you have to use bullion. So anyways, I'm gonna wrap this video up here. If you thought this video was educational, informational, or at least just entertaining, make sure to smash that like button. Subscribe if you're new. We have a 250 like goal. Please hit that like button. Let's see if we can reach that goal. I definitely think we can. So I'm going to wrap this video up here. Thank you so much for tuning in. Stay tuned for more videos coming today. This was Silver Slayer. I'll see you guys soon. Peace.